Hello, everybody, and welcome into Commodity Culture, where we break down commodities markets, sound money principles, and geopolitics, all with the goal of making you a better investor in the commodities sector. My name is Jesse Day, and today is November 4th, 2025, and I'm thrilled to welcome Ed Steer to the program, a precious metals expert who has been analyzing the space for over 20 years, a former contributor to Casey Research, and the founder of Ed Steer's Gold and Silver Digest. Ed thinks the recent correction in the silver price wasn't a normal pullback, but a manufactured one, as bullion banks shorting the metal panicked and threw everything they had at tamping down the price. A situation Ed believes is only temporary, as the fundamentals for the metal mean it's only a matter of time before it screams much higher. We also discuss China tightening export controls on silver, why silver inventories at the LBMA are still in an extremely precarious position, why he sees the American empire as being on its last legs, and so much more. So strap yourselves in for my conversation with Ed Steer. Ed Steer, it is great to have you back on Commodity Culture. Last time I had you on the show was August 22nd, when silver was around $38 an ounce. We have, of course, had a tremendous run since then, silver reaching a new nominal all-time high of $54 before correcting, and now we are at around $47, I believe, in 20 cents last time I checked. What do you think are the main catalysts that drove silver to that new nominal all-time high, and what do you make of the recent drop in prices?
Well, it's strange. We had our last, like you said, we had our last conversation August 22nd. Probably it was the next day the silver price started to go. And like you said, we've been in rally mode up until about a week or so ago. I think it was the 17th of September when the commercial traders stepped into the market on a Friday and capped the rally. It's a combination of a whole bunch of things that there's first of all, the debt. I think it just turned over 38 trillion, and then there was talk about interest rate cuts coming in October, and of course we've already had that, and now they're talking about whether or not they're going to have one in December. That's sort of up in the air at the moment. But it's a combination of the economy and the situation abroad and currency depreciation. We're well along what I call the road to perdition. Where the fiat currency system is coming to an end. And, we've had a huge run up in gold and silver as well. And, this is just everybody's starting to see the writing on the wall. And, we're starting to see, other major financial institutions like JP Morgan and Morgan Stanley and Ray Dalio and a whole bunch of other high profile people saying you have 10, 5, 15, 20, 25% of your portfolio in gold. And of course, silver's in a structural deficit. So it's a whole combination of things that took us up to the high that we had. And, it was starting to run away to the upside. And, if the bullion banks and the whole, bunch of crooks hadn't stepped in, we'd be looking at some fantastic prices for silver and gold. So, this correction, if you quote unquote healthy correction, which it really isn't. It was, a manufactured correction. If they hadn't stepped in, heaven knows what the prices of silver and gold will be by now.
Well, let's talk about that manufactured correction, because last time I had you on the show, we were talking about the late, great Ted Butler's article, The Bonfire of the Silver Shorts. Were we seeing that type of scenario playing out? What is the current position, in your opinion, when it comes to the bullion banks and their manipulation of prices? And obviously, it ran away from them to a great degree. So are we experiencing, perhaps the real silver squeeze this time around, the real short squeeze? And are they on borrowed time at present?
Oh, absolutely. There's no question about it. I mean, we've been in a structural supply deficit in silver now, for 5 years, going on almost 6 now. And, this is starting to, manifest itself in the price. And this big run up it certainly looked like it had all the manifestations of a short squeeze, although there's no real way of telling, Jesse. And the reason is because the U.S. is shut down. The U.S. government is shut down. We haven't seen a commitment of traders report since the 23rd of September. So that's 6 weeks ago. So there's no way of telling, what's going on under the hood. But you're right. This is starting to take off in Ted's bonfire of the silver shorts, and there certainly has been short covering going on because I've been watching gold and silver open interest, and they've been coming down like a rock, especially gold. And so there's no question about that. Part of this rally was short covering because they're just the short position is just absolutely choke a horse, and that's one of the reasons they had to step in because Ted's bonfire was lit. And if they didn't step in, like I just said, to answer your previous question, we would have seen the silver and gold prices that we can't possibly imagine. And that was the start of it. And so they had to step in. And but once this managed correction, or what I call a wash, rinse, and spin cycle is done, we had one in early April like that too. It lasted, a week or so? And then we were off to the races again, and this one may last a little longer and go a little deeper, but the end result will be the same. We'll take off to new highs. There's one thing you have to remember. At the low in April, I think silver got down to about $27 an ounce. Well, since the low in April and the high in 2 or 3 weeks ago, silver's almost doubled in price. So this is just another correction, and once this one is done, we'll be off to the races to higher prices because the silver deficit has not gone away. It's getting larger and larger all the time, and the problems they had in the LBMA last month, running out of silver. I mean, the foreshocks are there that we have to have much higher silver prices to close this structural deficit.
Well, I want to talk about LBMA inventories in just a moment, but first I want to pull on a thread regarding the bullion banks stepping in, because from their perspective, when they see silver prices rising as rapidly as they we're dealing with, short contracts, we're dealing with derivatives. It's a fairly complex market for a lot of people. From their perspective, the perspective of the bullion banks and the people who are in this short squeeze, what are the mechanisms exactly from your standpoint from which they do step in and control or tamp down the price?
Okay, well, you have to remember it's very easy. The commercial traders, the bullion banks, and commodity trading houses, they've been on the short side forever. And all the other traders, the other reportables, the managed money, the small traders, they've been net long gold and silver forever. So when the price starts to rise, when the traders, the small traders and the non-commercials, start to put on long contracts or start to cover short positions, somebody has to take the short side of that trade, and it's always the bullion banks. So as the other reportables and managed money traders pile in on the long side or cover shorts, the bullion banks and the bullion banks go short against them. So the short position the commercials get more and more short until they get to the point where it is a huge short, it's a very usurious short position. They're short about 60 billion ounces, or $60 billion in the COMEX futures market right now. And, they waited until all the managed money traders, et cetera, had piled in on the long side. And when they got as many mice in the trap as they could, then things started to run away. They pulled a lever on it, like I said, back on October the 17th. So, the bullion banks have been fighting this commodities rally in the gold and silver all the way up. And this is, like I said, this is just a pause before we head higher from here.
Let's talk about LBMA inventories, because when silver was around all-time highs, I heard a lot of reports that the LBMA silver inventory had essentially reached zero and they were trying to ship in as much physical metal as possible. In your view, how much validity is there to these reports? And what is the current silver inventory situation at the LBMA? Is it still precarious?
Oh, absolutely. I'll get into that in a second. But what happened was that the LBMA basically ran out of, they have a float there of stuff that they can ship out the door that has no claims on it. And the fact of the matter is they just plain ran out. And one of the reasons they ran out is because of the huge, huge purchase that India made, which They back in September, I think it was the headline of they bought 31 million ounces of silver in September, which was all got delivered in October. And the LBMA just simply flat ran out. I mean, they had no silver at all. Okay, and the lease rates shot higher. If you wanted to borrow it, it became very expensive to lease it. And they had to fly in silver from all over the place. Switzerland, United States from the COMEX, and even the Shanghai Futures Exchange, chipped some silver in. To give you some idea, I got the numbers right here because I write them down every day. In September, silver was, and this is the COMEX, there's 27 million ounces shipped in, but only 14 million shipped out. But in October, when the crisis hit of the LBMA, now that October is done with, there were 10 million ounces of silver shipped into the COMEX in October, but 58 million plus troy ounces were shipped out. And that went to London to fill the orders that they had there. And Switzerland, I'm sure, contributed some, but we won't know that until another week or so. But the fact of the matter is that the LBMA flat ran out of silver, and they had to top it up from the COMEX and probably from Switzerland as well. So, as I said in my column this morning, they got maybe 10 or 20 or 30 million ounces of worth of float over there, but basically they saw the bottom of the barrel a month ago, and they don't have much left. And with this deficit going on, it's not going to take them long to chew through whatever's been sent over there from the COMEX and from Switzerland, because I think the Silver Institute said the deficit this year would be around 150 million ounces. Well, if they got 30 or 40 million ounces over there, they're going to go through that before Christmas, or early in the year. So, and it was a critical time, and they moved heaven and earth to put out that fire on the LBMA. But it's just a matter of they put off the inevitable. 2 or 3 months down the road, they're going to be faced with the same situation where they just don't have enough silver, and the battle will be on to find more silver to fill up the LBMA because the last thing they want to do is default. But sooner or later, with this silver deficit running on 5 years, they can't keep it up forever.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. And do you have any insight in terms of silver inventories on the retail bullion dealer side? I had a bullion dealer on the show a few weeks ago, Ian Everard, and he said that physical silver in many ways seemed to be going extinct. He wasn't able to get a hold of a lot of products. I saw some similar reports circulating online on social media. Have you talked to any bullion dealers in Canada or the United States? And do you know if they're experiencing inventory shortages as well?
There is a problem getting product. There's no question about it. I know that there's restrictions at the Royal Canadian Mint. They had a large buyer come in there, was it last month sometime, and bought every single solitary troy ounce of gold they had.
Wow.
Bars, coins, the whole 9 yards. They bought the whole thing. And now the mint is only producing the maple leaf. I don't even know if they're just whether it's the 1 ounce or the whole size range or not, but that's all the mint is producing. The Royal Mint in England has faced the same problem, and there hasn't been any sales we haven't seen the October sales report for the U.S. Mint yet. They've been very tardy in reporting their sales, but there's no question about it. It is for the retailers. It's been hard to get product during October and parts of September when the price really started to go, because retail bullion sales went absolutely crazy. I remember Keith Neumeyer stating something that October or September, I can't remember which month it was the biggest sales month of all time. Of course, they don't have any trouble getting supply because they mine the stuff and then just have it smelted at Salt Lake City at Asahi and then ship it to the refiner. So it's not a big deal for them. But no, the reports about there being shortages and getting retail silver are absolutely true.
I want to talk about the on and off again U.S.-China trade war. Obviously, we saw some controversy involving rare earths. China was going to be restricting rare earth exports. Trump threatening to slap an extra 100% tariff on them. Of course, the market started to crash and he reversed course and said, she's a great leader. Actually, I'm sure we'll come to a mutual understanding. It seems to some extent they have. They had a trade. They had a meeting. Supposedly it was positive, but the interesting thing is sometimes the Trump administration will give positive news and China will say, yeah, we didn't actually talk about that topic that they're saying was good news. But nonetheless, on the rare earth side, apparently it's not as bad as it was. But I want to read a quote, a tweet from the United States Antimony Corporation. They're talking about China actually tightening export controls. It said on October 26, China's Ministry of Commerce announced that tungsten, antimony, and silver will be added to China's key export supervision catalog beginning November 2025. So already started. Exports will now require quota review and joint approval, replacing the prior self-reporting system. This means tightened export oversight through 2027, not a relaxation of controls. Now, at the moment, I believe the U.S. has added silver to a draft of a critical minerals list. I don't think it's been 100% finalized at this point. Do you think this will push that over the finish line, and your overall thoughts on these export controls?
Boy, there's a lot to unpack there. I'm going to go back to the previous question you asked, you were asking about the LBMA. I said, well,
yeah,
there was silver shipped out of the COMEX, and it was shipped out of Switzerland. It was shipped out of the Shanghai Futures Exchange, the Shanghai Gold Exchange. And what I didn't mention at the time is that the amount of silver that's left the Shanghai Futures and Exchange, the Shanghai Gold Exchange, is just absolutely enormous, how much they've been using and how much they've been shipping out either to the LBMA or for other reasons. The combined inventories of the Shanghai Gold Exchange and the Shanghai Futures Exchange are the lowest they've been since the first quarter of 2017. I mean, I look at the chart on Nick Laird's website, and I published it in my column, 2 or 3 weeks ago when this was going on. And I said, I made it a comment. I said, the Chinese have, a seat on the LBMA. They know what's going on. I said, it's only a matter of time before they're going to step in and halt exports of silver out of China because of their, disastrously low inventory levels. And lo and behold, look what came up this on October the 26th. Now, it is going to be interesting to see how this plays out. Okay, China would have a good case for absolutely cutting, silver off at the knees for export purposes, because their silver inventory levels are critically low. So that's just one straw in the wind. You've got the LBMA at record low levels. You got the Shanghai Futures Exchange and Gold Exchange at record low levels, and then add to the list, like you just mentioned, the fact that the U.S. is considering putting it on the list as a critical mineral. I mean, you got all these things coming together, confluence of forces coming together in the silver market right now from every direction that you can imagine. It just absolutely screams that higher prices are coming down the road. So, we're all sitting here waiting to see what the government does about this. And I wouldn't be at all surprised if they added that, and if they start to stockpile silver. Good luck to them, because I don't know where it's going to come from.
Well, let's shift over to the gold market. A similar story to silver, with its rapid rise to around 4,400 before experiencing a dip down to where we now sit. Last time I checked was around 3,900. In my view, much like with silver, this is just a blip on the radar. The fundamentals behind the sector seem extraordinarily strong. What is your view on the gold market and its future trajectory at present?
The same thing as silver. The thing is that, gold is the king of money and silver is the queen. And everybody talks about gold. I mean, that's what J.P. Morgan Stanley, Ray Dalio, you name it, across the board. All the big players, heavy hitters out there say buy gold, 10, 15, 25%, as we spoke about at the top of the program. And, the thing is that, the central banks, there was a story came out today where they bought 39 tons of gold in September, central banks of the world. And I don't know if they're going to hit a record again this year, but the central banks are scarfing this stuff up because they know perfectly well that this whole fiat currency scheme is going to come to an end one of these days, and they're preparing. Everybody's preparing for it. You are, I am, your listeners are preparing for it. We're all sitting here all loaded up with with our precious metal portfolios, and these guys, with the billions of dollars and the central banks of the world, know perfectly well what's coming, and they're preparing for it just like we are. It's amazing to watch. And the other thing I want to point out, we're talking about low silver inventories in the LBMA. The other thing that I keep track of the gold inventories too, from that get shipped out of the COMEX. LBMA is totally opaque, so nobody knows what's going on there. But in October, the month just passed, the amount of gold that was shipped out of the COMEX was just absolutely amazing. There was 457,000 ounces received in October, but they shipped out 2,562,000 ounces, which is like unbelievable. I mean, that's absolutely enormous. And my opinion is that it all ended up in London because they say that, there's no problem with the gold inventories in London. There's lots of it. But, I'll tell you what, there's been a run on silver, run on platinum, run on palladium. It's, my opinion is that the run on gold is starting to affect London as well. If you go back to September, what left the COMEX in September, there was 1.2 million, 1.25 million ounces received, but only 175,000 ounces were shipped out. That's in September, and of course in October it went to 2.5 million ounces shipped out, which is a huge change. So, not only was silver getting frequent flyer points to London, but gold was too. So, my opinion is that the float of gold in London is not anywhere near what they think it is or what we know it to be. My opinion is that their float there in gold is getting pretty skinny as well. So, the demand for gold this year in the last 2 or 3 years as everybody starts to, head out of the fiat currency system and go after hard assets has gone from a trickle to an absolute flood. And it's only a matter of time before we start seeing shortages in gold too. And I get a feeling it's not that far off.
What sort of risk do you think the Central Bank of Canada is taking by not having any gold whatsoever on their balance sheets? Do you think there's anybody there that realizes this is an issue? Do you think they perhaps do have gold, but they're not publicly stating it? Do you think in an extreme situation they would nationalize gold mines or find a way to take a stake in gold mining companies in the country to try to get gold? What are your overall thoughts there?
Well, I'll tell you what, I am somewhat familiar with the what's going on in Canada since I live here, and I wrote an essay about it about 20 years ago. Canada's central bank has no gold at all. I don't think it has any plans to get any. What would they do in a crisis? I don't know. We're a vassal state of the U.S., just like Europe is, and we pretty well do what the U.S. tells us to do. And I don't know whether the Federal Reserve has any power over the Canadian bank that says, we don't want you going out there, refilling your gold reserves. Because at one time, way back, like 40 years ago, Canada had 660 tons of this stuff. And that all got sold out in the 1980s and 1990s. And would Canada nationalize the gold mines? I don't think so. This is just not the kind of country you're going to see that as in, we still have sort of a democratic institution in this country, and any move to do that I just don't think it's going to happen. It's not something I can see. They may take stake in gold mines, like the U.S. is starting to do, government is starting to do in, some of the rare earth minerals. And they may say, okay, fine, you got to, tell the gold companies you got to sell a portion of your production to us or all of it or whatever. But, that's hypothetical. I have no idea what they're going to do, but Canada's not in a very good place because I think they're the only member, one of the only Western country that has no gold reserves at all. It's absolutely pathetic.
Yeah, it's completely insane, and none of the politicians, aside from Maxime Bernier, are really talking about it. I had him on the show, and I love Max, but I don't think he's going to become Prime Minister of Canada, unfortunately. And so there's nobody really, they're asleep at the wheel essentially. So it's pretty incredible to watch. I want to talk
Well, it's
about
not
yeah.
Jesse. They're not asleep at the wheel. This is deliberate policy. Okay,
Mm.
I mean they're not stupid. They may have been born in late, but it wasn't last night. I mean, they see that they read the same stuff that we read. They see the same stuff. They hear the same stuff. They can see what's going on in the world where China's accumulating gold and Russia and Poland and the whole nine yards. They can see everybody. All the central banks of the world are running to gold. I mean, the
Yeah.
World Gold Council reports it, and I'm sure they read this stuff. They're not stupid, but it's a deliberate policy not to go there. It's as simple as that. And it's unforgivable. They're putting our country in terrible shape. Just take a look at the Canadian dollar versus the U.S. this morning. It costs $1.41 Canadian. For every dollar U.S. our Canadian dollar is worth $1.41. Our currency is going in the toilet.
Yes. And speaking of currencies going in the toilet, I'd just like to get your views on the overall fiat currency experiment that we've been living under since essentially 1971, and how nobody really seems to be awake to it. But obviously, it's the US dollar, which is still considered the world reserve currency. How much strength do you think the US dollar has left in it here? And obviously, we've spoken before on this show about the BRICS nations and them starting to use gold and the potential for a gold backed currency, all of those sorts of things. Haven't heard much of it in the media these days, but what are your current thoughts on the strength or weakness of the US dollar and the fiat currency system in general, and where you think we are when it comes to this experiment?
Well, the U.S. dollar is still the world's reserve currency for the moment. It's been declining in value and importance, over many, many decades now, and the process is accelerating. It's just recently with the run up in the price of gold that gold is now the number two currency in the world after the United States dollar and ahead of the euro. Basically what's happening is the precious metals are remonetizing themselves, and then gold is money, and it's always been money. J.P. Morgan, the man himself, was right over 100 years. He said gold is money and everything else is credit. And as far as the BRICS nations are going, I mean, they would love to come up with some sort of other payment system, and they're working on one. And gold is going to be a huge part of it. I know that China's already, heading down that path very strongly, and sooner or later that may come to fruition. But the United States is basically in the last 2 or 3 or 4 months has declared war on BRICS. I mean, they've gone after Venezuela, now they're going after Nigeria and Russia and the whole nine yards. China. This is a fight of a decline of the West in decline versus the ascendancy of the East and the southern countries. And the United States and its vassal states in Europe and Great Britain are not going to go down without a fight. And that's extending into the precious metals, and you can see it in the price. And we're living through history at the moment, and it's just a matter of time before the West finally does give up the ghost, and the East it becomes ascendant, and it's already ascendant. And China and whatever currency they come up with will end up winning this fight, and to the detriment of everybody in the West. It didn't have to be this way, but the United States is, like I said, they could cooperate and go along and become a multipolar world, but they want to be the indispensable nation, and it's going to cost the West everything.
Well, as you've outlined there, it really feels like we're reaching a tipping point when it comes to untenable government debt and unfettered fiat currency creation. I think that one of the main reasons gold is going higher is related to that, and you've just laid it out there as well. But also governments getting more and more authoritarian in their attempts to control populations. Do you think this is them essentially trying to get people under their thumb as much as possible? So in the case of a collapse of the current monetary system or some sort of, what you're describing, the rise of the East and the fall of the West, when society really falls apart because using Canada as an example, I personally think it's headed for a long, brutal economic decline. Now, we have seen the Liberal government come out recently and say they're going to fast track all of these critical mineral projects, or that they realize it's a problem, they need to do something about it. But life for your average person making an average salary is absolutely brutal. And this is something that is being echoed across many, many countries: Germany, the UK, France. I mean, the list just goes on. So do you think this move towards authoritarianism in the West, to the point where it's now the mask of so-called liberal democracy has almost completely come off, is this completely connected to the situation we find ourselves in with rapidly devaluing fiat currencies, untenable debt and deficits, and perhaps a way to just get everybody enslaved as much as possible before the whole system breaks, and then you can at least try to maintain your own power and your own wealth as a political leader?
Well, that's certainly a possibility. I mean, the powers that be out there in the financial world and the political world know perfectly well that the current system, the fiat currency system, and everything paper is going to come crashing down sooner or later, because everybody knows there's been no currency in recorded history that didn't backed by something that has survived the test of time, and ours won't either. I mean, this is an old story everybody knows. And there's no question about it. The governments are becoming more authoritarian as the currencies get debased, and their economies collectively decline. They may be able to control all of the people for certain things, but the fact of the matter is that gold and silver are international currencies and have been currencies all through recorded history. And the governments can do whatever they want, but in the end, anybody that's holding gold, silver, or the miners or whatever, we're going to survive this and thrive. But for the vast majority of people, it's going to be a very ugly, ugly ride in the West.
Well, you touched on some of the wars that the U.S. is getting bogged down in. We've got, of course, Russia, Ukraine, which Trump has constantly flip-flopped on, and now it seems like he wants Russia to essentially come to the table and negotiate peace on the U.S.'s terms. Talk of providing Tomahawk missiles to Ukraine, even helping them with targeting infrastructure and other targets within Russia. Of course, we've got Israel-Palestine, tentative ceasefire. Seems like that's just getting broken. That feels like it was more for optics than anything else, and perhaps for Trump to try to make a run to get the Nobel Prize. But we've got, as you mentioned, Venezuela. They're indiscriminately destroying boats, claiming they're smuggling drugs, murdering people. I mean, maybe they are, and maybe this is a great thing, but we don't really have any evidence from the government to show us that this is the case. And as you mentioned as well, they're threatening Nigeria now, all for the Christians, supposedly. What is this? What is the impetus behind this? Is this for the resources? Venezuela is very oil rich. I believe Nigeria is also oil rich and other minerals as well. Is this them trying to basically strong arm the world into saying, okay, they're still the global superpower? Is it the last gasp of a dying animal lashing out? What are your thoughts there?
Well, I discussed that briefly before, but it's a combination of dying empire, natural resources, but in the big macro picture, it's a fight by the United States and the collective West against the rise of China, Russia, and the rest of the BRICS nation, East versus the West, and good money versus fiat money. So, everything is at stake here, and nothing at all surprises me that the U.S. is trying to pull off in the world to maintain their hegemony. But it's a losing battle. It's a war they have already lost. It's just a matter of how long they can prolong it before they hit rock bottom. And we saw it happen to the British Empire and the other empires that have followed before them. And the U.S. is going to end up in exactly the same spot. But between now and whenever they hit rock bottom, it's going to get very ugly. And like I said, the only hope that we as citizens can do is to survive it by buying the precious metals and just holding on for dear life and just waiting to see how it all turns out.
Very well said, Ed. Fantastic conversation as always. Tell us about Ed Steer's Gold and Silver Digest.
Okay, well, if you're interested, just Google my name, Ed Steer, Gold and Silver, and my website will pop up, and there's a tab on there that for a free sample column, and if you can read that, and if you're interested in subscribing, you get about 260 columns a year, 5 columns a week for 52 weeks, and the cost is US $100.
Great. Well, I will put a link in the description below for people who want to check that out. Thank you so much, Ed, for coming back on the show and sharing your knowledge with the audience.
Well, thank you for having me on, Jesse. I appreciate it.
Thank you for joining us today. ARC Silver Gold. Osmium has great prices on gold and silver products. Some of them are coming up on your screen right now. These are all well, supplies last, so make sure to reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And of course, pick up your Commodity Culture merch, all backed by a 100% quality guarantee using the link in the description below. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.